Joe,
go too hard.
We were going to talk, and I still want to talk about carried interest. That's why we originally had this debate.
Yeah.
Make your case, because a lot of people, you said it online, even in your business, don't like to come out publicly in favor of carried interest, or at least to speak, vociferously about it. You think it is a very important tax treatment for your industry. So the floor is yours. Make the case, and we can talk about it.
Listen, I think President Trump is winning every day right now. I'm a huge fan. Tax policy is a great way to use, like you said, to piss everyone off of me. But listen, there's a couple of things I'm thinking of changing. The biggest one is the state and local tax deduction. That's $1 trillion question. The carried interest one is like a $10 billion question versus $1 trillion question. So it's a very small amount of tax. And what people are saying is that it's unfair that we get long-term capital gains treatment. Now, I'll tell you, the reason America has long-term capital gains treatment in general is not because of a fairness issue. If it was about fairness, let's give more money to middle class and the working class. I'm 100% aligned. President Trump's going to do that with tips and et cetera. The reason we have long-term capital gains as a framework is it unlocks capital freeze problems. And so when you are, I'm going to be fine no matter what. But when other people who are managing money, like in venture capital or in long-term private equity, when they have a win, they've been building the company over multiple years, then they get the share as a percent of their carry. So just like the founders, just like the employees, just like the investors, they get those shares. And if you have a 23% rate, it's a much more likely they'll reallocate the money than if you give a 60% tax hike and have a 37% rate, which is what some people are talking about. And so that's the same reason we have long-term capital gains in general. You don't want to do capital freeze. It'd be crazy to do a 60% capital gains effectively tax hike on these people who own shares, right, who are the innovators in our economy. Right when, as JD's talking about, AI is going to make us more prosperous. It's going to be really good for our country. We want to reallocate to new projects.
Okay, Joe, here's where I'm going to come on the other side of this. Capital gains was built to incentivize, as I think it should, more investment in America. We are trying to get Americans to invest their own capital, not other people's capital, but their own capital, and we give a better tax treatment for that. Ordinary income is for your labor. Everybody's labor, I believe, is the labor. I don't believe there's a special form of labor for one particular class over somebody else, which is, by the way, what carried interest at this particular moment is. As for incentives, to me, assuming that you and everybody in the private equity and venture capital business actually are committed to your own fiduciary duty for your investors whose capital you're allocating, it shouldn't matter what the tax rate is for you personally, because the argument should be that you would be making those investments, buying and selling assets based on your fiduciary duty to those whom you represent.
You're missing something there, Andrew. When we have a big win, what happens is you distribute the shares for almost always in the biggest wins, and so you end up with shares actually. And it's not. You've been both a new tax and old tax. You don't get taxing on those shares right away. You end up with those shares. Now the question is, when you sell those shares, are you going to get the 23 or the 37%? The reason it's 23 is because you might own those shares another 5 years, and then you pay when you sell. That's how it always works now. It's how it's going to work even under the new code. And so that's really important. It's like you're owning this thing you've been working on. You want to have the capital gains tax be the same reallocation incentive. I'm talking about system incentives here now. Totally agree with you. Tax rich people more. Stop letting them take money offshore for reinsurance scams and hedge funds. There's so many ways we should tax rich people more, but the incentives are long-term when we get shares for having built something.
Well, with the exception of founder shares, I was going to say most employees don't even get this benefit, which is to say, if you have RSUs or in most cases most options, there are certain kinds of options, but that's limited at $100,000. Even those folks are not getting the benefit. So to the extent that the venture community or the private equity community says, well, look, it's like we're an employee of the company. We're giving our sweat equity. Every employee in America is giving their sweat equity to all sorts of businesses. That's what they're doing. And they pay ordinary income on their sweat equity. If you put money into the company, and if you do, which I know you do, that portion of of the capital obviously should get paid at a capital gains rate. But I'm not sure why this particular construct is the one construct in the entire universe where effectively the sweat equity should be paid at a different rate.
Well, I've helped thousands of employees who work for me buy their options and get long-term capital gains, and so there are thousands to do that. You're right. Later stage in the company, it's harder. But look at the system incentives. We're arguing about $10 billion here at most over 10 years. You know, I think the bigger thing that'll piss all your viewers off is the state and local tax deductions. It's at 1.3 trillion. I don't think they should get that back in New York and California, but now my partners in California will be angry at me.